To understand what a housing bubble is, we need to start with the basics. At its core, a housing bubble is a period of rapid and unsustainable price growth in the real estate market. It occurs when home prices rise far above their intrinsic or fundamental value. Now, let's explore what causes a housing bubble. 1. Low interest rates. One common catalyst is historically low interest rates. When central banks lower interest rates to stimulate the economy, borrowing becomes cheaper. This can lead to increased demand for homes, driving up prices. 2. Speculation. Speculation plays a significant role. Investors often buy properties with the expectation that they can sell them at a higher price in the future. This speculative behavior can inflate home prices. 3. Easy mortgage access. During a housing bubble, lenders may offer loans with little or no down payment and lax lending standards. This makes it easier for people to buy homes, further increasing demand. 4. Positive sentiment. Positive sentiment and the belief that home prices will continue to rise can become self-fulfilling prophecies. People rush to buy homes, further fueling the bubble. Now, let's talk about the signs or symptoms that indicate the presence in a housing bubble. 1. Rapid price increases. One of the most obvious signs is rapid and unsustainable price increases. When homes become unaffordable for the average person, it's a red flag. 2. Speculative behavior. If you see a lot of speculative behavior, such as house flipping, it can indicate that people are buying with the intention of selling quickly for a profit. This speculative frenzy can push prices even higher. 3. Easy credit. The availability of easy credit, where lenders are lenient with lending standards, can suggest that the bubble is being fueled by excessive borrowing. People who wouldn't normally qualify for a mortgage are suddenly able to buy homes. 4. Media hype. Media hype and stories of people getting rich quick in the real estate market can be a sign of irrational exuberance, a common element in bubbles. When everyone is talking about real estate as the best investment, it's time to be cautious. Now that we've covered what a housing bubble is and what causes it, let's explore the effects. 1. Housing affordability crisis. As prices soar, housing becomes unaffordable for many, leading to an affordability crisis. Families find it increasingly difficult to purchase homes, and even renting becomes expensive. 2. Risk of price collapse. The most significant danger is the risk of a price collapse. When the bubble bursts, home values can plummet, leaving many homeowners underwater, owing more on their mortgages than their homes are worth. 3. Financial instability. A housing bubble can lead to financial instability, as the real estate market is closely tied to the broader economy. A crash can trigger a recession, impacting not only homeowners but also businesses, banks, and jobs. 4. Loss of confidence. A burst bubble can erode confidence in the real estate market, making it harder for people to buy and sell homes. This can lead to a slowdown in the housing market, affecting both buyers and sellers. So, how can individuals and policymakers prevent or mitigate housing bubbles? 1. Smart regulation. Policymakers can implement smart regulations that curb risky lending practices and speculative behavior. For instance, they can impose stricter lending standards to prevent loans from being issued to borrowers who can't afford them. 2. Monitoring. Regular monitoring of the real estate market for signs of a bubble is essential. Early intervention can prevent a bubble from growing too large. Government agencies and financial institutions should keep a close eye on market conditions. 3. Education. Educating homebuyers and investors about the risks of bubbles can help them make informed decisions. People need to understand that real estate markets can be cyclical, and it's not always a guarantee of quick profits. 4. Diversification. Individuals can diversify their investments to reduce their exposure to the housing market. Instead of putting all their funds into real estate, they can consider stocks, bonds, and other assets to spread risk. In conclusion, a housing bubble is a phenomenon where home prices rise to unsustainable levels due to various factors, and it can have significant economic and social consequences. Recognizing the signs and understanding the causes can help you navigate the real estate market wisely. Thank you for joining us on this deep dive into the world of housing bubbles. If you found this video informative, don't forget to hit that like button and subscribe for more content, and I'll see you in the next one.